Good morning, everybody. Good to be with you. I am back. I'm feeling much better, tackling my COVID issues, and it is, needless to say, very, very good to be back to normal. Thanks, Abraham. Good to see you here. Good to see all of you guys here. Looks like we've got a good turnout this morning. All right, guys. Hey, welcome to the Hurley Investments Trade Findings and Adjustments, October 21st. Not a whole lot I wanted to go over this morning, but just some key thoughts and ideas, and just talk about a couple things, answer some questions for you guys, and go from there. So, man, this week has been incredibly nice to see our accounts double the market's doings every day. Another day, market's down slightly. You can see a little bit down here, and we're up today, or at least we were this morning. Let me log back into our accounts here just a moment. And so yes, it's nice to be back, nice to be seeing things. So market is just touching all-time highs. I'm pretty sure the Dow is fairly similar today. Just take a quick look, and both just touching that spot and taking a breather. Nothing too much to shout home about, but that's just where we are. Getting some accounts uploaded here with where we're at today, so I can show you guys. Here we go. It's not a rip-roaring day, but I'll take a positive day and a negative market day any day of the week. And how cool is it that pretty much every day this week we've told the market who's boss. So very cool. So what do I want to talk about today? I keep getting the question about Bank of America. I keep getting the question, when are we going to protect Bank of America? When are we going to protect profits? Well, so you guys take a look at this chart. What do you guys think? What are you guys seeing that should tell me, all right, we should take profits? And it doesn't necessarily have to be the chart, but pretty much the last 4 days, you can see how Bank of America has been moving. All right. Should we protect Bank of America? This is what I'm asking you. What are you guys' thoughts? Because I keep getting this question. William says, yes, looks like it's time to protect profits. Okay, there's one for William. Mary says, quite a nice run. Makes sense to protect. Okay, thank you, Mary. Anyone else on what we should do? All right, so I had a couple comments. My question is, why? Abraham says, maybe it's reasonable as it touched the Fibonacci levels. Not something I use, but yeah, that is something. We've got, what else have we got? Overbought. Okay. Williams percent R overbought. But man, it's been like that for over a month on the Williams percent R. And several times touching it on the RSI, coming down. We've broken above that trend for the last 4 days. We've been overbought. So you might be thinking, well, that's my reason why we need to protect. But what we're dealing with here, guys and gals, is a bullish moving stock. And just because it's overbought doesn't mean that we automatically protect, because it's starting to follow a trend of bullishness that could keep going. It is in a bullish trend. This is Technicals 101. So again, if it's a bullish moving stock in a bullish trend, what is telling you that that trend is over? because being overbought is a product of a bullish trending stock. It is not a complete signal that there's been a change in trend. It's not a change in trend. If anything, it's telling us and confirming that this is a bullish moving stock. Abraham says, agree, but on the other hand, implied volatility is in the very low percentile, cheap to buy. So what you're telling me, Abraham, is it's cheap and more money should be going into it and continuing this bullish trend? That's what I'm getting from your comment. I think you're agreeing, but implied volatility just means implied volatility. So Abraham says, you bet, but with you're saying not at the money leap or buy cheap protection just in case. So I'm not interested in buying protection. I guess this is the point I'm going over. Because we still have a bullish moving stock, and it doesn't make sense right now, this day, what we're seeing that indicates a change in direction. We're not going sideways. We're not hitting the end of this channel down here. We're not being told anything else right now besides this stock is in a bullish trend. So why would you protect a bullish moving stock and give up gains? So I think it's more important to confirm a trend, and when something good is happening, you should let something good happen. That doesn't mean tomorrow it might reverse. It doesn't mean that the trend won't change eventually. That's not the point. We're not trying to outguess the future. We're objectively looking at right now the simple, basic 101 chart technicals and objectively letting it tell us what's happening right now. Why would you protect a bullish moving stock? Well, Keith, what if it changes? What if it goes down? Well, that might be the start of a change in trend. But again, That's not what's happening today. Abraham says, in any case, you should have a plan for whatever happens, or to close at a certain level, or buy protection, or so I think I kind of laid out my plan, right? My plan is when there's a change in direction that can be confirmed, then we can buy protection. We're not going to guess the tops. It's not going to happen. Why try and outguess the tops when you just don't know? I mean, think about Baidu earlier in this year. How many times would have made sense on the way from 130 in November last year all the way up to 340 in February, March this year? How many times could we have completely gave up our profit by trying to protect our profit? Abraham says having a line in the sand. I agree. There's times for a line in the sand, and you get a better idea of where that is when you get a better idea of where your support and resistance levels are. And there's nothing I'm seeing for that right now today. Maybe it will come back and test this 44, 87, 45. I don't know. That might not even be the line in the sand. It might continue up further enough that we create another support level. And that's what tends to happen as after a bullish trend. It consolidates and tries to set a level of new support. All right. So I think I made my point fairly clear, and I think that's important to give you guys an idea, give you a thought process to go for, rather than trying to pretend you can do something you can't. Live within, and I'll write this. Live within the framework of what we know right now, and what we can control. And right now, controlling is, what does that look like? It looks like not doing anything, and that's exactly what it is. Controlling impulsive decisions, controlling impulses. All right, any thoughts or questions more on that? Thanks for your comments, by the way, Abraham. Outside of these technicals, we still have the narrative that's working for our banks right now. Tapering coming up, interest rates coming up. Those are all positive still. So really that's pretty much what I had for you this morning. I'd like to reiterate the Kevin Square trade that he talked about Monday. He'll probably talk about it again. Just some last thoughts here, and it kind of just going back to this whole thing. Nice to see things starting to come around for us. Nice to see some of these stocks start to take some moves that we've been patiently waiting for. Baidu coming along. Baidu could easily make our year, and I think the next stopping place is 200, 205 maybe. We've had a year where our summer was sideways and our stocks moved sideways for us, while I should correct, the summer was bullish for the stock market. Some of our bigger holdings, Apple, Disney, went sideways through the summer, and our protection came at a cost. So another question is, well, you guys clearly read things wrong through the summer. Wouldn't you have changed your approach knowing what you know now? And again, this kind of just goes back to the Monday morning quarterback mentality that serves no real purpose in learning from the past. It only serves, to me, it looks like, only serves to, what's the way to put this? It only serves to entertain naivety and entertain the idea that we have control over something we don't. The correct way to learn from the past is by keeping tabs on what you missed. You don't learn from the past by pretending you could have known what you know now. By pretending that you could have known what you know now. So the best way to manage last summer, where our stocks went sideways, would have been to sell, to run, I should say, covered calls and protect at the top of sideways trends. Duh. But, and I'll say, let me try doing this instead. This is naive and it's naive and wishful thinking to believe this would help us in the future when we base it off of knowing what happened. Because we don't know the future. We don't know what will happen. I don't want to give up profits and cap ourselves. I didn't want to go cap ourselves to the upside on our stocks because it's a very difficult way to have to manage things, and I wanted to keep all of the upward possibility open and possible. So that's why we didn't do covered calls and pretend that we could call the top every single time and deal with the summer where we're starting, where we started to hear that this idea of, geez, they're going to retroactively tax capital gains. I mean, that comes out of left field. That's ridiculous. You can't predict that kind of stuff coming out of nowhere. All right, so I hope I've made a point here, guys. The difference between a successful long-term investor and trader is someone who can stick to some principles and know how to manage where the stocks are going and understand where stocks are going and understand that we can't know the future and we can't analyze the past with a 2020 Monday morning quarterback perspective. It's more than naive, it's wishful thinking, and it is primarily the reason that loses people money in the stock market. So, more important to stick to some principles, be objective, let the market tell you what it's doing, let things move and let things happen a bit. And I think you're starting to kind of see where a good amount of patience is paying off. You're starting to see it with Baidu. It's only a matter of time. We'll start to see it with some others, Boeing, Disney, and we'll be glad that we were mature, patient, took a step back, looked at the big picture, stuck to some principles, and just let things happen objectively and dealt with things as they came. All right, guys, that's off my soapbox. Any thoughts, other questions, concerns that you might have, throw them my way right now. But otherwise, that's pretty much all I had for you this morning. Let me phrase this better. All right. No questions coming over, guys. I really appreciate you joining me this morning. So nice to be back with you, chatting your way. Thanks for listening in. Thanks for your thoughts. Let's try to understand the why of what we're doing. Just think through things. And I think we've got a good opportunity and a good game plan. And I appreciate you guys thinking through things with me, giving your thoughts, and we're better with each other's brains than separate. All right. Thank you, guys. No comments coming in. Talk to you guys later, and we will see you with Kevin on Monday's commentary. Take care. Bye.